What's up, everyone? My name is Ali. Welcome back to my world of stocks. Really quick, just before we start this video, I want to let you guys know that I've been dealing with some pretty severe stomach ulcers lately, so I apologize if I'm a little off in today's video, but I'm going to be trying to kind of power through it, so hopefully it turns out okay. But just wanted to give you guys that heads up. Anyway, I want to say welcome back to our 3 stocks on sale series, this time for the month of February 2024. Now, in each episode, I pick 3 new stocks that I feel are super attractive at today's prices for the long term. And to make it a little more fun and interesting, I specifically choose one lower risk, one medium risk, and one higher risk option for added variety, which, by the way, this month includes a brand new addition to my portfolio that I just purchased for the first time ever, so you won't want to miss that. It's going to be pretty fun to look at. But as always, just please make sure that you do your own research and make your own decisions. I'm just showing you some stocks that I happen to like based on my own opinion. But if you're enjoying the series, then please consider subscribing, because it's a free way of helping to keep my channel alive, and I really appreciate that support. So thank you so much, my friends. But I don't want to waste any more of your time. Let's go ahead and jump straight into this, because we got a fresh new list of stocks that I think are worth considering. And they're pretty cool ones, so I can't wait to share them with you. So let's just go ahead and jump into it. All right, now, you know what? February is really considered the month of love, right? Well, for stock number 1, our lowest risk option, I'm not only picking a stock that I love myself, but it's probably my overall favorite in the entire market, and that is, of course, Google, ticker symbol GOOGL, which I know I talk about this one a lot, but this past week, the stock actually dipped on earnings, and I just think that it is setting up here a great opportunity to buy even more. Now, we'll get to those earnings in just a second, and I'll share my thoughts on all of it, but as far as the stock goes, it happened to drop over 7% on the day that they reported, leaving it also down over 7% for the week as well. And while it's true that the stock is still mostly trading near an all-time high after seeing a big recovery in the past year, I actually think that there's still plenty of more room to run up from here. Because first of all, despite this being a market leader in virtually all the big internet-based markets out there, like smartphone systems and internet browser and search and email, maps, and a lot more, well, Google's valuation is still somehow cheaper than the sector on a PEG ratio basis, which makes absolutely zero sense to me. And I just believe that at any time that you see that this stock is trading below that mark, I think it's worth picking up. Now, on top of that, you see these gigantic financials here, right? Well, doing over $300 billion in sales and over $70 billion in profit, and still expected to grow by a double-digit rate on sales with an even higher, nearly 20% growth rate over the next 5 years on EPS too. Well, what's crazy about that is that these financials and just how large and dominant their business is, well, it should put it right there among the ranks of other giants like Microsoft and Apple, at least in my opinion. But instead, we see that Microsoft sits above a $3 trillion market cap, while Apple was already there before and is hovering just shy of it right now too. But Google, well, they're not even above $2 trillion, which I think they're more than deserving of, and are just an overall better buy right now too. I mean, let's compare it to the biggest in Microsoft, for example. Would you believe that Google actually does more in sales by almost $100 billion annually? They do more in profit, and they have a higher EPS growth rate too, yet their market cap is actually more than $1 trillion less. It's pretty interesting. And look, I'm not saying any of this to bag on Microsoft. They're actually my #1 largest holding. So of course I love that stock too. But I'm just saying that Google is comparable and should be trading higher because of it. In fact, Microsoft made much of their rally off of the backbone of AI and how they're implementing it throughout their business. But Google is really doing the same thing with theirs too, using it for things like search, maps, their Pixel phones that can translate languages and do special edits with photos. They use it on YouTube, digital advertising, the Google Assistant, Gmail, their giant cloud business, and even in Google Workspace and Docs to create, query, extract, analyze, and structure all of your data too, which oh, by the way, competes directly with Microsoft Office as well. So the sky's really the limit here. And as far as those horrible earnings go, well, they weren't even that bad either. In fact, they actually beat analyst estimates on both the top and bottom line. They just fell a bit short on ad revenue, which, coupled with a $2 billion charge from workforce reductions and the fact that the stock had already risen by 56% going into the report, I just think investors were really looking for a reason to sell out of the stock to begin with. But not me. I think they're crazy because ad sales still rose by a double-digit rate, and the CEO even talked about how their new AI model Gemini is already being integrated into ads in order to fuel future growth. So I'm really not worried about it much at all. Even Cloud benefited from their investments in AI with a massive revenue pop of 26% after seeing a slowdown the quarter before. Guys, I really don't know how long Google is going to trade this cheap. I don't think it'll last forever, but while it does, I am going to be a buyer of it. And even if it does happen to fall more or the market crashes or whatever else, well, Google would be at the top of my list of stocks that I'd be wanting to buy much heavier all the way down anyway. So the way I see it, Google was already attractive to begin with, and at today's prices, I think it's even more attractive, and even if it got lower, it'd be even more attractive than that. So I'm a buyer kind of no matter what at this point, but I like it at these levels, and I'm going to be investing in it long term. All right. With that said, it's time to move on to stock number 2 now, and we're going to have to increase our risk a little bit because this is our medium risk option. And for these, I sometimes like to throw in a dividend payer just to kind of balance out that risk a little. And for this month, I actually have one of my absolute favorite dividend payers in the entire market right now that I also feel is heavily beaten down into discount territory. And that is the biotech and pharmaceutical giant Bristol Myers Squibb, ticker symbol BMY, who has now seen their stock price plummet by over 40%, which not only leaves it trading right at a 52-week low, but it's also at one of the cheapest prices that we've seen in over a decade, which is also leaving them with a dirt cheap valuation that is over 60% cheaper than the sector, despite this being one of the biggest leaders in the space, doing over $45 billion in sales and over $8 billion in pure profit just last year alone. And it doesn't even stop there, as the lower stock price has also sent their dividends soaring to one of the highest yields that we've seen at close to 5%, with also some excellent growth metrics on it too. Ignore those 7 years listed there, by the way. I think that's a mistake by Seeking Alpha, but they've actually increased that dividend for over 15 years in a row, while also paying one for over 90 years in a row. How crazy is that? Plus, it's still got room to run even higher with a very small payout ratio below 30%. So regardless if you're a dividend income investor or a dividend growth investor, BMY really has something for everyone here. And I think it's just a great all around dividend stock just in general. With that said though, why then has the stock been crashing by so much? Well, like most falling biotechs, this has mostly everything to do with the loss of patent protections, most notably their best-selling cancer drug, Revlimid, which started losing patents in 2022 and is now having to compete against generic competition. On top of that, its other 2 bestsellers will likely lose protection later this decade, which is something that investors are probably preparing for early on by selling out of the stock right now. However, in my opinion, there does enter a point where the stock selling is overdone and an undervalued stock emerges that is now worth picking up. And that's what I believe is happening to Bristol Myers, as the company is in fact doing everything it can to turn things around. For example, they just reported earnings this past week, and despite Revlimid sales falling by a massive 36% last quarter, their total sales for the company actually grew by 1%. I get that that's really tiny growth, and that's not obviously not anything to brag about, and being expected to flatline over the next couple years isn't going to turn any heads either. But I actually think that it's pretty impressive here considering the devastating blow to Revlimid. And a big reason for that stabilization is because of a younger portfolio of new product approvals over the past few years, that many of which are seeing giant growth rates, with the totality of it up a massive 66%. Obviously, these new drugs only make up a fraction of the company's total revenue, but if they continue growing like this, well, they will make up a bigger chunk over time, which I also think will be further helped by their ever-growing pipeline of over 40 new drugs and disease areas being developed and studied respectively. Plus, Bristol Myers is making key acquisitions right now that are worth billions of dollars so that they can better prepare for when their other high-selling drugs do lose patent protection in the coming years. These include companies like Turning Point Therapeutics for over $4 billion, Raise Bio for also more than $4 billion, and Mirati Therapeutics for close to $6 billion, all of which develop various treatments for cancer, which is right up Bristol Myers' alley, as that's arguably their biggest expertise. And so overall, I just see this as a great dividend biotech who has a much smaller payout ratio than the competition, which I also believe may give them another advantage here in terms of being able to direct those funds into paying down debt, developing new drugs, and making key acquisitions. And look, I get that right now is a scary time for them. Obviously, they're in a bit of a turnaround phase here, so we can't compare this to other safer investments out there like Google or Microsoft or Amazon or anything like that. But as a dividend payer with a proven track record, trading at somewhat of a historically low price here, at least valuation-wise, well, I just think that it's worth the risk here. So I've been a buyer of it myself, and I happen to like it as a long-term dividend stock. All right, guys, it's time now though to finish up with our third and final stock of the list, which is also our highest risk option. And this month, I'm going with a brand new addition to my portfolio that I just now started picking up, and that is none other than one of Cathie Wood's absolute favorite and largest biotech investments in CRISPR Therapeutics, ticker symbol CRSP, which has now seen their stock price plummet coming off of the pandemic, currently down over 70% from the top. And you know what? All along the way, Cathie has been right there buying up as much of the stock as she can get her hands on, purchasing over 380,000 shares worth somewhere around $25 million just in January alone. How crazy is that? Just in that past 1 month alone, she purchased that much of the stock. It's pretty interesting. And look, I've never owned it before myself. I've always seen it as too much of really a speculative kind of high risk play on that future of gene editing through their CRISPR and Cas9 platform and technologies, and one that also has very volatile financials with often steep losses on the bottom line. But after seeing it fall by this much, I just felt like it was finally time for me to start dipping my toes into the stock and opening up a very small position here to see where this goes. Now, in terms of potential, well, I think it's certainly there. I mean, gene editing has the potential to disrupt a massive healthcare industry here if it's able to effectively treat various diseases like autoimmune and blood disorders and hereditary disease and even cancer. Or it can even be used for therapeutic and regenerative purposes too. But we've only really started to scratch the surface of what gene editing can ultimately accomplish and how it can transform people's lives. However, the issue with all of this is that it's all still in the very early stages of discovery and trials, which is why most of CRISPR's treatments are still far back in their pipeline. However, the reason why I like CRISPR more than most is because of how heavily they went in on the technologies from the beginning, which led to a substantial lead over the competition. Kind of reminds me of Tesla in that regard, how they went all in on electrification and autonomous driving before everyone else, which really helped them lead the market ever since. And well, in the case of CRISPR, they're actually the first company in history to receive regulatory approval for 2 different blood disorders that use their Casgevy gene editing therapy. It's very impressive. And so over time, I do believe that we'll slowly start to see more approvals pop up as well. But in the meantime, CRISPR also tries to partner with other big pharma companies whenever it can in order to help subsidize their business, lower costs, and potentially bring in some much needed cash flow, which is why you sometimes see them actually turn a profit. And in the current year, in fact, sales are expected to jump up to over $300 million with the launch of Casgevy, which by the way is in partnership with Vertex Pharmaceuticals, where they do get a share of the profit, but they've also been paying for most of the cost. So it's actually like a very beneficial deal for CRISPR. It really benefits CRISPR to make these type of deals with other big pharma companies. Casgevy, by the way, is expected by analysts to eventually become a blockbuster treatment, meaning that it would generate more than $1 billion in sales. And because the disorders that CRISPR usually aims at solving are more rare with little to no effective treatments available, and even those that are usually very expensive, well, I actually think that hospitals and patients will be more willing to try out these new gene editing solutions from CRISPR than you might think, which could really help them ramp up long term. For example, one of those blood disorders that they're treating is life-threatening with a median age of death of only 37 years and can have a lifetime cost of up to $5.7 million to treat with stem cell transplants, which also require available donors. But Casgevy, on the other hand, can edit the patient's own cells to reduce or eliminate the need for any transfusions at all, which also costs less than half the price and is only needed for a one-time treatment. It's pretty interesting stuff. Of course, there's a lot of downside risk too, though, when it comes to this stock. If any negative news comes out or any delays happen with their products in their pipeline, well, that's obviously going to hurt them a lot because this is still a relatively highly valued speculative company with not too great financials. But I feel that if we're kind of looking back on this many years from now, will this be one of those revolutionary companies that we kind of kick ourselves for not having invested in the stock early on? It could be the case. Unfortunately, I can't answer that question definitively because a lot of this is still speculation, but I personally feel like I've seen enough here to at least warrant a small position here as I cautiously move forward with this stock, keeping a very close eye on their business and seeing where things go, seeing how they perform, and seeing if I have more opportunities to pick up more stock if I'm still liking them and believing in everything that they're doing. So it's kind of a let's wait and see how things go. Only opened up a very tiny position that I'll have to be adjusting to over time. But overall, I kind of like it here as a speculative play for the long term. But anyway, I'm probably rambling on. So I'd love to hear what you all have to say about all of these stocks here down below. Let me know if you like any of these. Are you invested in any of these yourself? Do you like any of them? Do you agree or disagree with anything I said? And are there any other stocks that you're buying right now? I'd love to hear about them. Maybe I'll include them in a future video. Anyway, thanks again for all your support, my friends. I really appreciate it. I hope that you are all doing well out there. Now we'll catch you in the next video. All right, take care, everybody. Bye-bye.